What's your team got? What's the relevant experience here? Have you put uranium mines into operation before? Do you know how to sell product into the market? Can you get deals done?
Yeah, well, look, I certainly agree with you, mate. And I like the word mining plus, but I'd call it mining plus, 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 plus. Because you've got the social aspect, you've got the political aspect, you've got the radiological aspect, you've got the environmental aspect, you've got the interest group aspect, and you've got a very complex market to add to all of that. So to answer your question, absolutely. And we're very privileged like that because there is only a small talent pool to go around in the uranium sector. It's been a bear market for a decade. And it wasn't particularly cool before that either. So many of the people in this sector are advanced in experience, if we can put it that way, and falling away. Many of the people that I met when I joined the sector back in 2009 just aren't around anymore. They're not working anymore. So as many of your audience would know, I've got a profile in the nuclear sector and I understand the market and the dynamics quite well, but that's not the same as operating and building mines, of course. Our chairman in Namibia and our non-executive director is Mike Leach. So he was the managing director of the Rossing uranium mine when that was the largest uranium mine in the world. For 15 years before that, he was the CFO at that mine, responsible for contracting and all of the other aspects of interacting with the uranium market that you would expect in Namibia. Our managing director in Namibia is Werner Ebolt. He was mining manager at Rossing, and he's also been very involved at a leadership level in the Chamber of Mines of Namibia. Born Namibian, very, very well regarded, obviously understands this precise style of mining very, very well. Dustin Garrow, who's been on your show quite successfully, judging from all the Twitter comments. Dustin is our strategic marketing consultant. Not only has he been in the nuclear industry forever and knows everybody, but he sold uranium from Namibia for Paladin for many years. Any of the nuances of selling Namibian uranium into the world market, including some of your questions that you answered before, he's all over, he's across all of that. And obviously a fantastic person to have as part of the team. So that's a uranium specific experience. And we certainly believe that that gives us enough experience at the senior level to then be able to infill the middle management and other operating jobs that we would need to do. Particularly given Namibia's got a long history in uranium and there's plenty of very capable and well-experienced folk that you can draw from there before you even need to start looking at expats, etc.
Okay, so that does answer that one. That's quite a good summary, actually. Come back to this price component, okay, because there's something that is just niggling away here. If you are or do have conversations with Chinese utilities who need to, they need a lot of pounds, but given the numbers that you were mentioning there, they have a very different set of needs from the company and the shareholders, in the sense that you've got to work out how to capture value and not just give it away, because the utility just wants the pounds. They could care less what your share price is, right? So they could step in today and secure it all, but that's not good for you, it's not good for shareholders. So your conversations and your timing is really, really important. But needing $52 to break even when you look at $33 today seems a long, long way away, and getting to 75 feels even further away. So what does the next 12 months look like for you at Bannerman, and what do you need to happen in that time frame?
Yeah, great question. And I think you can look at that from two perspectives. From the inside of Bannerman, I can answer that, and then I can attempt to answer that from the perspective of an investor as well. Inside Bannerman, we've got our work cut out for us. We don't run a big team. We keep our overheads low. There is plenty of value addition that we've got lined up for the next 12 months. And so from managing a team and managing a project and adding value to that project, I'm quite comfortable if that's how long we've got, because there's a lot that we can do in terms of NPV accretion, et cetera, et cetera. So I'm not worried from an internal perspective. From an external perspective and how investors would look at this, there's something that you sometimes see amongst retail investors on Twitter and elsewhere, which is they look at the gap as you have between $33 and $52 or $75, and they seem to think that this is a binary question. Bannerman's worth X today at $33, and it's worth 100X at $75. So I might wait until we're at, until we can see $75 in the writing on the wall before I'd want to step into a stock like that. But the reality is it doesn't work like that. We're a heavily leveraged play. And if you look at any of the other sectors where big leveraged companies have emerged from that transition from a bear market into a bull market, they've revalued at every single step, every transition between X and Y. And that's what we will see with Bannerman. And that's, if you look at our register, we've obviously got a very large component of specialist uranium funds. Now, they're in their own category because they are strong believers in the thematic, and the fact that there's, as we stand, 22% of our register is in the hands of those funds just demonstrates that they don't have a problem with $75. But we've also got about another 20% of generalist resources institutions on our register. So a retail investor should ask themselves, well, why are those guys there? And they're there because they see Bannerman as a series of stacked options, leveraged options to the uranium price. They know that as uranium price goes from $30 to $35, we see a leveraged effect in Bannerman's share price because of our scale and the fact that we can deliver producible pounds into the next cycle. Same from 35 to 40, same from 40 to 45, and so forth. And for many of the institutions on our register, they treat them as stepped options. As it goes to 35, some of those institutions will say, right, do I rewrite that option by holding, or do I cash that option in because I've now seen Bannerman's share price double, for example, and therefore I'm going to cash that option out and take it off the table. And retail investors, I think, can include Bannerman in their portfolio in a very similar way. And, if they're holding on a multi-year, multi-bagger for when we do get to $75, then that's fantastic. I look forward to seeing them at the party when we get there.
Okay. So that you're talking about being a leveraged play. And so just give me your definition of what you mean by that.
Yeah, so it's a conventional definition of a leveraged play. So You've got very, very large production capability that exacerbates and multiplies the movements in value compared with the movement in value of the underlying commodity.
Okay. So basically, people need to believe that this thing will get into production. And I think there are companies that we've interviewed that won't. So people need to believe that you've got the capability and the knowledge, and we'll be able to get the finance to be able to get this thing into production, to be able to accrete value up that with those steps as you've described. And you feel you will?
Yeah, well, I guess we haven't talked about financing capability. We are a lean team with a lean board, but our chairman, Ronnie Beaver, he's an investment banker, ran Rothschild in Australia Pacific for many years. This was his bread and butter, even at this scale, for many years. Ian Burville's also on our board. Ian was a partner of Resource Capital Funds, still the largest resources PE firm in the world. And he worked for Rothschild before then, so there isn't anything about financing that between them, Ian and Ronnie don't understand. And whilst I wasn't a project finance lawyer, because of the corporate and the M&A background that I've got, I interacted a lot with that. So I think I understand the process relatively well, at least well enough to be able to set out a strategy for that.
Okay. I look forward to sort of seeing what you actually do over the next 12 months, because I think the uranium space has gone through some rapid movements recently, but it needs to move more for people to believe that this thing's going to happen anytime soon. I mean, have you got a view on when you think you're going to be able to start to be able to have meaningful conversations in the context that you've described earlier, in a way that you feel a bit more in control? Because your share price perhaps wouldn't allow you to have a strong and robust conversation with a funder now. But at what point do you think you will be able to have those conversations?
So in terms of time frame, as we've discussed on other occasions on the show, that's a bit of a difficult one because all of the feedback that I'm getting is that utilities are really quite distracted at the moment with COVID-19 measures, whether it's working from home or dealing with some of the on-site challenges that they've got at their reactors. So even as we see uranium start to knock on the door of $35, that's not in itself going to be a trigger for long-term contracting because the buyers have got bigger fish to fry right now. And if they have to focus on their key priorities as uranium goes through 35 to 40, well, so be it from their perspective. So I still think that we're talking about end of this calendar year before we see substantive contracting take place. And I think that will benefit Bannerman and other uranium companies because by then we'll have a spot price that creates a more realistic base from which to achieve long-term contracting premiums from. The other way to look at this, which isn't so much a timing point of view, but is more of a price point of view, is our project starts to look really interesting to a number of parties once they can see $50, $55 clearly. It doesn't mean we need to have that price. It just needs to be that they can see that this sector has now emerged from the long-term bear market. They don't need to see $136 like we saw during the last boom. They don't need to see term contracting at $95 as we saw during the last boom. They need to see this price pushing through 50 to 55. And at that point, the sovereign groups or the utilities or the groups that are looking at vertical integrations, they will start weighing up, on the one hand, the relative simplicity of being a buyer of uranium through long-term contracts at, let's say, $55 versus the security of being an owner in some form of production at a similar price. Now, there's pros and cons on both sides, of course, but that for me is an inflection point where Bannerman becomes a lot more interesting to those types of groups. And you asked me when I would start talking to those sort of groups. Well, for me, that would be a clear marker that we've got sufficient tension in the market that I know that they'd want to be talking to me, but at that point, that's when I'd be interested in opening a discussion with them.
Have you got enough cash to get you there?
Depends on the time frame. We've certainly got enough cash to get through that first estimation. So we've got $4.5 million. Based on our typical burn rate, that's about 8 quarters, so 2 years. So we've got enough money to see this calendar year out, next calendar year, and if we needed to go a bit further, we could. So if we find ourselves not seeing conditions improve within that time frame, well, it probably speaks bigger things about the market and something's gone wrong somewhere. So I would say, yeah, we've got the cash that we need to see that cycle through.